All right, good morning, traders. Today is Tuesday, March 30th. My name is Charles, and this is the Pirate Traders live stream. Okay, well, I was a little late getting up this morning, so I'm going to have to do this in real time. Looks like the overnight market was just in balance. Its overnight inventory is net short, so that increases the odds of a counter auction up first thing in the morning. But once again, we are opening inside of yesterday's range. Yesterday was, I want to call it a balancing day, but it wasn't really a balancing day, was it? It started as a balancing day that pushed higher and then bounced higher. Actually, no, let's just call it balance. It only barely broke out above the previous day's high. So we had excess at the end of Friday. Then on the weekend, overnight, balance. Yesterday, balance. Overnight, balance. Anybody recognizing any patterns here? So this is what the market does. When the market creates too much excess, it has to balance, and it just continues to balance until it doesn't. So what does that mean? How do we judge when it's done balancing? Well, when we break out of this range, of this now area that we're balancing in, that's where the end of balance and the beginning of new excess starts. So what I'm looking at is on the upside, I'm looking at the POC from yesterday, which is also lined up almost perfectly with the POC from overnight. So if the market works its way up to these levels, okay, and they don't act as resistance, the market just pushes right through, then comes back down and finds support, I would go long with that trade. Keep in mind we got the poor high from yesterday above us and the all-time high, which was poor in the overnight session. So both of those are like magnets for price to want to come explore. Okay, this is repaired because we opened below it. Again, when we open inside the previous day's range, we almost always have chop. So for the first, hour to the day, might be tough to jump into trades if you're not a scalper, because the market will just be grinding its way around, frustratingly. So nothing wrong with just stepping back, let the market do its thing. You only need one good trade every day. So that's what I'm thinking. Step back, let the market. So to the upside, it's where the POC is. Let's call that, 3960-ish. If we get up to that level and there's no resistance and we just pop right through, come back down and find support. Again, it doesn't have to be exactly here, just somewhere in this range. Then I go long. To the downside, it's the low of yesterday, right? So if the market pushes its way all the way down to the low of yesterday, it finds no support. It just pushes right through and then comes back up and finds resistance. I go short with it there. If it pushes its way down to yesterday's low, pretty much anywhere, underneath the overnight low, and finds support in here, I go long with it as well. Okay. And to the upside, if it gets up and it explores a little bit above yesterday's high, and then it pulls back down in, I would go short with it there. So I would say the MO for the first hour today will likely just be watching the market chop. Market internals a little bearish, but not dramatically so. Almost neutral. Good morning, Fausto. Good to see you. Thank you for the thumbs up. Appreciate it. Rocky, good morning. Good to see you. Trading Donkey, good to see you. Phoenix, welcome. Thank you for the heads up on the consumer confidence and Fed speakers. Michael, P pattern. No, the overnight inventory is not a P shape because it started up here and then traded down to these levels. It's a P shape if it starts at the bottom and then pushes up and then bounces up above. But that is a good observation. Lahab, is the market trending or ranging? I don't know, my friend. No idea. My guess would be, if I had to like right now at this moment guess, would be that we'll balance. We'll have another day like this. Um, but I how could I know? We have to wait and see. You'll know that we're trying to break out of balance if we get above this, prominent POC area here. If we can get kind of, and like I say, we kind of have to just like go straight through it. It's just like it's no problem. If that happens, we'll probably continue to trend higher. But if we start hitting tons of resistance here, there's probably more balancing that needs to take place. So let's see what happens when we get there. Steve Z, good morning. Deke, good to see you. Newsblip, hello. Parlin, good to see you. FRM, welcome. Philip, good to see you. Yep, same 1 minute high. I mean, that's just probably coincidence and just a sign that the market is in rotation, right? It's just balancing itself off here. We like doing business at this level. Angelo, good morning. Jeff, good to see you. Hi, good morning. Herman, good to see you. Kai, good to see you. Philip, Osif, Armando, Michael. Man, I'm going to have to stop saying good morning to everybody. There's so many of you that are regular participants now. Well, I'm so happy to have you. Welcome. Let's all make some money today. Nathan, good morning. RK, unfortunately, no, I can't make the text larger. I do throughout the day, like when I zoom in, right? I can make it larger like that. But the downside is I can't see any of the references, right? So I kind of have to I try to get as zoomed in as I can, depending on what we need to see. Like right now, I could be this zoomed in because we just want to see where the prominent POC is up here and the overnight low down here. But throughout the day, you want to be able to see where the old references were. So I stay zoomed out a little bit. My apologies, my man. You can get this software for yourself. You go to windowtrader.com, window spelled without a W, and you can get it for yourself. And then, you can keep it like super zoomed in so it's easy to see. Okay, heading down to test the overnight low. All right, Hermit. I just checked that out. Very fucking cool. Thank you for sharing that, man. I appreciate it. For those of you that are on the Discord, for those of you that are not, I'll pop up another link here. But he just posted that. And I downloaded it and ran a virus scan. It's not a virus. It seems to be real. So, good to go. Thank you very much. Scott, good morning. John, top of the morning to you. Yeah, I'll jump on the NQ real quick. Let me just copy and paste this link to get into the Discord. Salmon, I would not say that. The reason is because it broke below that, right? So if we stretch this out, expand the profile, so you could see you were creating that 45-degree angle in the first part of the overnight trade. New people joining. Welcome to the Discord. A place for you all to discuss with each other because I always forget to check it. Yeah, so you could see they were trading up in here, and that's what was creating that 45-degree angle. But then they sold off through it, so it's no longer relevant. That is a good thing to note. But yeah, we would have wanted the whole overnight to stay in that range. Okay, the NQs. Let's take a quick look. All right, so we're now below the overnight low. So anywhere in between the overnight low and yesterday's low, we could find support here. So that'd be something to keep an eye on. Where does the market find support and start to work its way back higher? Okay. Wow, the NQ has like a really nice flow of the market when you zoom out on it. It actually makes kind of clean moves. That's so interesting. Anyway, so the NQ looks a lot like the ES, but it is weaker. We've already broken yesterday's low, but we did have, excess, balance, 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 and now we're testing the lower end of that balance. Looks like we just got a few ticks below this overnight low. So that's a little more bearish than the ES right now, but very similar. If the ES works its way to yesterday's low and it doesn't find support, it pushes through, that's a very good short for a break out of balance, right? We would call, let me get that little drawing tool up. So we would call like this right here the balancing area, right? So if we break below it, that's likely to lead to downside continuation. If we break above it, it's likely to lead to upside continuation. But as long as we stay in this range, we could just bounce up and down forever. And by forever, I mean a few days. But what might feel like forever if you're a short term trader. This to me is still neutral. It's still the market just working out its morning chop, trying to figure itself out. Okay, so the market did find temporary support at this level, but this is not good taper. 2,000, 3,000, 5,700. The market likely needs to come down here and do some more business first. Scott, what's an NPOC? I've heard of TPOCs and VPOCs, but never an NPOC. Slade, of course, as always, killing the game. Dave, good morning to see you. Oh, naked POC. It's naked. It's a virgin naked. No one's tested this fucker yet. We get it. That is awesome. You're right. We had a bunch of people join the Discord today. To me, when I originally started the Discord, the best purpose for it was the tab on the left that says share your trades right here, because you guys could treat this like a trading journal. You know what I mean? If you're willing to do it publicly, you could jump on here and just say, like, entering, one ES contract at 39.45. Boom. Like, a quick reason why, because of the overnight low or whatever. And then other people can give their opinion on that. They can respond. And also, just you could go back and look and see, which of your trades are successful and not over time. So that's one thought. If you have education, if you have like educational videos or something you want to share, we could start piling them up in here. So if somebody was new, they could come in here and see, oh God, look at all this great educational content, news, and general chat. If you guys just want to say what up to each other. So yes, please use this thing. As of now, the market is just rotational. Okay, not officially, not technically. But it looks like it just wants to do a bit of balancing here. Again, not great taper on this low, so I'd like to see us come down here and test this again and just create a little better taper. Market internals starting to trend higher on the ticks. Shree, if you just scroll up in the comments, I put the link a little higher up there in the comments. And good morning to you. Lahab, again, I don't know yet. It's a little too early. The market's still trying to figure itself out. We're still inside of yesterday's range. So, we can find support anywhere in here. Let's wait and see what the market does. As far as if we broke below yesterday's low, you got the POC from yesterday, the prominent POC from the night before that, and then the poor low. But I think we'll find support somewhere in here. Good call, Armando. I'll consider it. I wanted to kind of keep it as a thing that maybe I only invite certain people to. I didn't want to just make it generally open to the public. I am right now, occasionally, just posting it so anyone can join. But down the line, I'd like to have the Discord be more, traders in the know, more like the central community of us, rather than just any random stranger who joins in. They can comment in the YouTube, but the Discord becomes like where the family hangs out, if that makes sense. So that's my thoughts on that. Good morning, Jonathan. Okay, so we created a poor low here, just further proof that the market has not had enough excess to the downside, not enough two-sided trade to officially find support just yet. Thank you, Jason. Good morning, Chris. Good to see you. Yeah, there you go, Jonathan. Did I happen to click on it the moment you typed that? Yeah, I do look at the internals as well. I don't use them a ton to make trades, but I do kind of keep them in mind. Like right now, it feels like a balancing day to me, but it looks like the market wants to trend on the ticks. So just another data point for the back of the mind. Armando, yeah, that's exactly it. Sometimes these Discord groups just become so much noise. It's just so many people posting crap. So I don't want that to happen to mine. Um, yeah, so Chris, what you're talking about is like the initial balance. I don't look at that. That is something that Jim Dalton used to teach, but he has stopped teaching because he found in his own trading that it wasn't a statistical probability the way that he thought it was. So he stopped using it, and so I never actually learned it because I learned from him after he stopped. But I will say there's a lot of people on this channel in the chat who love initial balance and they use it every day. So to each their own. If it works, keep using it. Okay, well, any trend I thought was going to build in the ticks is now gone. Further sign of rotation. We are breaking that poor low we had created. So we're looking for support in here. We got to get at least 2 ticks below the A period. Okay, so we got 2 ticks of excess, so that's fine for the market to work its way back up. Now we need to see it find support. It is worth noting, though, that we are now 1 time framing lower. Value is overlapping to lower, okay, which is neutral to bearish. 1 time framing lower is bearish. And if we get below this low from yesterday, we're breaking out of that balancing area, which increases the odds that we'll rotate down to repair the poor low left behind yesterday. So if we do poke below this line, we want to just go down there real quick, create some single prints, create some excess, and then pull right back up. Any further time spent down here will likely lead us to repairing the poor low. Still feeling neutral because it could find support anywhere in here. Yeah, Amgossel, I didn't want to say it. You need to knock on some wood, bro. Okay, I'm not going to say that this is the low of the day or anything, but the taper is acceptable. 8,000, 4,000, 6,000, 1,000. I would prefer if it was like 8,000, 7,000, 6,000, but it's acceptable taper here. Brought in a tiny little bit of volume, fought a little battle, and then we worked our way back up into value. So let's see if this maintains support here. John, why Jesus Christ? Did you guys miss the first 5 minutes when I said the market will probably need to spend the first couple hours just grinding up and down to find its levels? Did you guys miss that part of the show? This is just a market doing what it do. This should not have any emotional effect on you. That being said, week C period high. Market's still one time framing, although it does feel like it's rotational. A concept that you guys will learn over time just from watching the markets is that when you open inside the previous day's range, you almost always get chop, and it can last for hours, okay? Also, if the overnight traded within the previous day's range, that increases the odds even further that you just get chop. So on days like this, it's so much easier to just kind of say, I would rather not take any trades for the first few hours, let the market figure itself out. Okay, so that's the early cessation of one time framing, again increasing the odds of rotation. So it's like if you don't feel the need to instantly hit the buy or sell button, like, oh, the market's open, I got to trade, get me in that trade. Like if you can just learn to turn that off and instead say to yourself, I'm not going to get into a trade until the market tells me it's time for a trade. I'm just going to sit back and, like, I mean this quite literally. I don't think to myself during the trading day, where do I go long? Where do I go short? What's my entry? What's my exit? I don't think like that. I'm sitting here asking myself, what is the market doing? So the market opened within range. I was like, right now the market needs to chop. It needs to grind. We came down here. I didn't try to catch the knife on the low. I didn't do anything. I just thought, okay, that could be a good low, could be a good area to find support. So I'm just, instead of trying to look for trades first thing in the morning when the market doesn't even know where it wants to go, I'm going to instead just observe it. And then when I am sure I know what I'm looking at, when I go like, okay, cool, now I've got a signal to go long or short, which, as I told you guys, for me, it's either going to happen at the low here or when we push through this POC here. Then I've got unlimited emotional capital, mental capital, because I'm not stressed out from trying to trade the chop first thing in the morning. So I've got a clear mind to then take good trades the rest of the day. So it's something I highly recommend. That one single thing, when you open within the previous day's range, just sit on your hands for like an hour. No matter what, just learn that habit and it will help you so much. It's like magic for your mental capital. That's a great trick. And that's one that I do um, if I'm trading and trades start going against me and I start getting emotional. It's like, just go for a walk, disappear for half an hour, come back. You'd be shocked what a fresh mind you have. Nope, I haven't taken any trades today. Waiting for the market to give me a better signal. Thank you, Jonathan. Yeah, looks like they are starting to kind of trend up and to the right. That's bullish. Let's see if that pattern can hold. Look at these candlesticks. That's a fucking nightmare for traders right there. This, by the way, this is the definition of chop right here. Yeah, Salmon River. I like that you're calling it a appropriate amount of profanity. I would call it a profound amount. But yeah, I do curse a lot. It comes with the pirate in me. Um, the liquidation having a negative 600 tick must have been bigger money making the move. Not necessarily. Could be. You know, you'll like to see a low in a random place like this where there's not any particular reason why it found support right at that level, because that is an indication of bigger money, right? Short term traders like you and me, we would have bought the low. We would have bought like an exact reference. We would have tried to buy exactly the low of the overnight or exactly the low of yesterday. You know, we would have been looking for some specific reference where we could enter our trade. But bigger money, they can't do that. They have to like sort of just layer in. So they would have started buying here and here and here and here and kind of like just buying their way into the position. So it randomly finds a support. So that is potentially a signal of that, but honestly, we don't know. Some might call it potty mouth. Well, then I just shit all over this stream, don't I? Oh, Phoenix, I'm sorry. I forget you guys have kids and shit. Oh, my bad. I'll try to do it less, but honestly, I went to military school, guys. I've been cursing since I was like 13. It's a part of my dialect at this point. Okay, created a little poor high here in the C period. Usually we have a push away from a poor high. So if we don't get that, that's a slightly bullish sign. Okay, well, I'm going to trust the ticks. I'm going to trust the internals, which are telling us that the bulls are stepping in here and that maybe this was a good low. I'm not going to jump into a trade, like I said, until we push through this price up here, but I am feeling bullish at this point. Yeah, Ratish. The way I trade as a trader is I am at every minute of every day. It's a nonstop process and it changes second by second. I am building a narrative in my mind. I'm telling myself a story of what I think the market is doing or what is it trying to do. And then I'm asking myself, how good of a job is it doing at accomplishing that thing that it's trying to do? Okay. So to me, when I see us, balance overnight, balanced on the day, balance overnight, and then open within the range of the previous day. Oh geez, I didn't even notice we opened at almost exactly the opening price of yesterday. That's really bizarre. Anyway, when I see that, I say to myself, I think the market wants to balance, right? I think that's what it wants to do today. So then I'm asking myself the questions of like, okay, what am I looking for to see if the market is doing a good job of balancing, right? Well, the first thing I wanted to see is I wanted to see us find support on the downside inside of yesterday's range. I didn't want us to go below yesterday's range. So I saw that. That's the first indication. Then we had the cessation of one time framing in the C period. That was the next, and so on and so forth. So the way I use the internals is exactly the same as I use the market profile. I'm just adding bits to my narrative. I'm just saying, okay, the ticks were trending and then they broke and now they're starting to trend again. So, maybe this is just rotation, but rotation higher, right? A grind up. That's all I'm basically doing is I'm looking at the profile, I'm looking at all the references, the shape, the volume, the tempo of how quickly the market is moving from place to place. And it's all just one little data point in a bigger picture in my mind of just trying to understand what the market is doing and how good of a job it's doing of it on a minute by minute basis. That's essentially how my analysis works. There's no specific thing where I'm like, every time the market gets to half back, I do this, or like, no. I'm just building a narrative. And then sometimes when that narrative becomes strong enough in my mind, I'm like, ooh, I know what's going to happen next. And that's when I enter a trade. I love it, Newsblip. That's what's happening. Today, the star of the show, rotation, balance. Okay, the C period is still weak. It needs to get one more tick up there to be a good high. There it is. So we got good excess on the C period high. We're above value. Let's see if we can continue to push higher or if we find resistance somewhere. Okay, so rejection off of that halfback level. Thank you for pointing that out. So yeah, I'm going to switch from bullish to rotational, but I do still think it'll rotate higher. I do still think we're on a grind up, but I don't think it's going to just break out and shoot up. Yeah, Ludmar, this is the ES, the S&P 500. Chris, what a silly question. I'm a trader. I feel that every day. you know, greed and fear are so powerful and they're ever present in everyone. And, even when I have tons of confidence in a trade, as soon as I enter, I start to get scared, right? Um, or I start to get greedy if it's in the green and I want to push it further than I really should. I should just take my profits, but I want to get a few more ticks. So, yeah, I, like everyone, must battle with that. Bob, you actually got a laugh out loud out of me because I am cheesy enough to find that hilarious. um, yeah, Daniel, his name is Jim Dalton. There's two of them, Jim Dalton, who you can find at jimdaltontrading.com. He's also on Twitter. And then Peter Resnicek, who's at shadowtrader.net. Speaking of Jim Dalton, he's got this thing on his website where he shows you the volume at the market level um, of the underlying assets, and much lower volume than yesterday for each 30-minute time period. Worth noting. Okay, market continues to rotate. So now that we're in the D period and we're still just rotating like this, I'm now comfortable to start taking trades in the way I take rotational trades. That is to go short above value and then take profits at the POC and go long below value and take profits at POC. I no longer have to wait to get above this level. That was a trend play. Now I think we're rotational, so I'll look for rotational plays. However, it is worth noting as well that for like the last, I think, 4 or 5 sessions, yeah, the last, like, I don't know if you can really call this one, but definitely for the last couple sessions, this one, not this one, but this one and this one. So 4 of the last 5 days have all started balancing and then created excess at the end of the day. Got to push higher or lower on these days. So we rotate until we break above the POC from yesterday, above this area, and then we might start to trend higher. It's just become a pattern. John, you are such a madman. What are you doing trading at 2 a.m., bro? You're trading at 2 a.m. and then again at like, I don't know if you're on the East Coast, but like then again at 9 o'clock in the morning. You're an animal. But yep, the market continues to balance. It's just these candles, these overlapping candles, you just don't fuck with that. Stand by, let the market figure itself out. It's still trying. The internals are giving a signal that it wants to push higher. There is underlying buying happening. But weak references above and below, overlapping candles, super tight range. Just let this sucker grind. Let it balance. The voices tell you to. Oh boy, we might have to dive deeper into this. Okay, E period low, also weak, creating two weak references below and one above. Deke, those are the best, those little happy accidents. It's a goddamn nightmare when it goes the other way, though. But yeah, that's happened to me before too. I was just talking about the other day. I had one a few weeks ago where I had left a contract on the ES that I thought I'd closed out, but I hadn't overnight. And I just like opened up my computer the next morning and had like a couple $1,000s of like free money and was like, woo, that was lucky. Could have gone the other way. Okay, as we get some excess above the high here in the D period, let's see what happens at the 20 moving average on the 15-minute candles here on the NDX. And then the next will be the same thing on the ES. So as I said, when I'm looking trading a rotational day, I look to go short above value. So I'll be letting it push as high as it wants to push and then looking for the resistance. Maybe it's half back of overnight right here at about 39.56. Maybe it's the POC or this little node of volume you can see from both the regular trading hours and the overnight, or maybe it's the 20 moving average. But those are what I'll be watching for resistance to take the short for a rotation back down. So I'd like to see that happen first on the NASDAQ, that the NASDAQ hits it and then it becomes resistance. Ahoy, me hearty. I'm here. There's just nothing to say. There's been no change for the last hour. So when there's something to report, I will do so. Okay. Speaking of which, I mentioned the 20 moving average. I'm happy to see that it acted as resistance on the NQ. So likely when the ES pushes up here and then gets against it, it'll probably be good resistance there as well. And they're trapping people on both sides. The shorts are getting trapped here and the longs. That's why multiple weak references above and below. Remember, when the market is doing this, it's like a spring that's getting squeezed tighter and tighter and tighter, or like a rubber band that's getting stretched out more and more and more. And so when it snaps, whether to the downside or the upside, it tends to be more of a violent move. No, go lay down. Okay, yeah. So the idea of being trapped is that like the C period came here, right? And then they shorted it. They pushed it down, but they only got to here. Okay, great. So then they went long. They came and they bought it up. They went long. Then they tried to short it again here at the exact same level. They pushed and pushed and pushed, right? So they pushed it down, and then they came in and they bought it up, and they bought it up. So these people that are going short up here at the high of the C, the D, and the E, they're all trying to push the price down, but they can't get anywhere. And then you got other players who are coming in and buying it up at the lows, and they can't get anywhere. So both the people going short up here and the people going long down here are expecting continuation beyond these levels, and they're just not getting it. So internally, they're becoming more and more frustrated. Like they're getting more and more emotionally upset with the fact that like their trade isn't going their way. And so that's what builds up that tension. That's what builds up that like powerful release once they do finally get it. Because then, let's say it breaks to the upside, all the people who were building up tension that were going short, they'll cover their shorts. That'll push up higher. And all the people that were building up tensions going long will feel relief and either hold their trade or add to it. So that's what gives you that like rubber band, spring sort of effect. But man, what a rotational day. We got perfect 2 ticks of excess and then rotated right back down to the POC. I mean, they just don't know what they want yet. But I do agree with the chat. I think the bias for the day is long. I do think we trade up into this upper distribution here. But they're just not making it easy. Phoenix 100%. That is a very, very common thing. And that's like one of the arguments for why poor lows and poor highs have to be revisited, because there's those people who went long or short at those locations and they'll just refuse to exit their trade until they get back to break even. But the second they do, they exit. So yeah, that's a big part of that theory. Very common. Yeah, but you see what they're trying to do. They're making the same play in the same place. What they've done is they've drawn themselves a trend line here on the candlesticks, and they're trying to buy right at that trend every time. And as soon as it breaks, all those longs are going to start to be like, "Oh fuck, I was wrong," and they'll start exiting, and so you get a quick little liquidation. But at the moment, the buildup continues. All right, so now as the market slowly almost works its way below the value area, I'll be looking for a long for rotation back to the POC. So once it pushes down, find some support, I grab it for the rotation back up. Yeah, John, you're putting way too tight of stops, my brother. It's a rotational day, so you don't have to be as scared that the market is gonna murder you on the other end. So, like, let's say you went long right here in the E period, you don't have to put like a 2 tick stop on that because odds are it won't get below this low. It's rotational, so as long as you can handle it, kind of working its way against you a little bit, you can have a looser stop before the rotation back. I would be much more cautious on the upside, but on the downside, I think it's fine to just go long and be patient, let the market work its way. Okay, once again, creating a weak reference with the F period low. Yeah, Salmon River. I 100% agree with that. The point of control, which is this line that goes across here, is referred to as the fairest price to do business. So if you're like a longer term investor or like a swing trader, nothing wrong with buying at the fairest price to do business because you hope as the days come that price will move higher and higher. Um, but if you're a short term trader, a day trader, you want to do business, you want to buy below the fairest price and you want to sell above it. So yeah, I almost never initiate a trade here unless I think that, on a rare occasion, if I think the market's going to trend or if it's a trending day where it's just pushing higher and higher, then I'll happily buy at the POC. But on a balancing day like this, no, sir. You buy below, you sell above. You take profits at the center. I'll tell you what, the probability of this market boring the shit out of me today is pretty high. If we're talking probabilities. So when it comes to the market profile, you can choose what time frame you want to build these profiles in. So this one that I'm looking at here is the regular trading hours, and then this one is the overnight. So you can put a POC in whatever time frame you want. So for mine, it's the regular trading hours and the overnight. But you could build a profile that's a full 24-hour day and then have like a daily POC as well if you wanted. Am Gossel, challenge accepted. There's 81 of us here right now. We're already at 46 likes. If you're listening and you haven't smashed that thumbs up button, please do it. We're trying to get to 100. Keep in mind, if you're here now because YouTube suggested it to you, I popped up in a search or a suggestion on the right side of the screen, that is because those that came before you hit the like button. So pay it back, pay it forward, pay it in a thumbs up. 54, we're halfway there. Thank you guys so very, very much. Yeah, Trade Donkey, it's happening. Jacob, welcome. Happy to have you. Okay, that F period low is still weak. We need one more tick of excess to be a good low. Okay, so now that we got good excess on the F period low, we are outside of the value area. I'm looking for the market to find support somewhere below the B period low, somewhere in here, and then rotate right back up to the POC. Yeah, Fosto, I don't think so. I feel like that was a good low this morning. I liked the way it felt. I liked the tempo, the volume. I don't love the taper, but it just felt like it was the low. So yeah, I suspect we find support before we get to it and then rotate back up. That being said, remember all the tension we just built up. We might need to liquidate a little bit here. Don't do it to us, market. Don't you dare. Push back up, leaving a weak reference behind. You bastards. Yeah, Slade, I wouldn't count on it, man. It seems like it's rotational. So actually, I could see a scenario where we push down and we start grinding down here a little bit, and that brings in a sell off. But man, another weak reference on the downside. Yeah, Slade, I'm exactly the opposite. I would call myself more of like a perma bull. Like I don't like trading to the short side. I find it harder than trading long in terms of like my own personal confidence in the trades. So I'm always secretly hoping for the market to go higher. But I don't hope, I don't wish. I observe the market and I go with it. So if I have to go short, I do. But yeah, I'd much prefer going long. Yeah, Jacob, odds are in favor you'll get your chance because we left that weak reference behind. That increases the odds only slightly, but it does increase the odds that we'll have to come down and revisit that level. Jacob, it's weak because the F period low is one tick from the A period low. And so that tells us that the people who did the buying here were short term traders like you and me, just regular day traders. And so anytime they come in and buy up a level, it increases the odds that it gets revisited because at some point they have to take profits, right? So that's not true buying pressure that wants to push the market higher. They're just waiting for their chance to get out of the trade. So, for example, in the F period, I missed the low because I was waiting to get 2 ticks of excess, but then I went long like right here when it started to push higher. And then I took profits like right about here. I was just basically trailing my stop up because I didn't like that we left the weak reference. And then it pulled back down for a second and took out my stop. So I'm one of those buyers, right? It's just weak when you only get 1 tick from a previous level. News blip, you know me so well. I hadn't thought of it yet, but it's appropriate. Intraday, Dave, I just look at what you're looking at on the screen. That's all that I look at. But I do, oftentimes in the morning before I get ready to start trading, I look at the monthly, the weekly, and the daily candles on the SPX just to give me some perspective. Sort of take a step back and see what's happening on a bigger picture. But during the intraday while I'm trading, what you're seeing here is literally all I'm looking at. All right, got 95 people now, so we definitely got some new people. For those of you just joining, please hit that thumbs up. We're trying to get to 100 likes today. So your likes could really support us in reaching that goal. Also, we have found that people that push the like button make more money. I don't know why, but that just always seems to happen. No, Bob, no, don't do it. Welcome, Philip. We're glad to have you. Maker, no, we don't call those poor references. We call them weak. So they're only poor if they're at the high or low of the day. So that's just a weak reference. Weak just means poor. A poor reference like almost always gets taken out. It's like a very high probability thing. It often pushes away first and then gets taken out, but it almost always gets taken out. Whereas weak references, you can easily leave them behind. They become much more potent when you have like a bunch of them stacked up on top of each other. But any one weak reference is no big deal. Okay, so John, if I went long at 41, right, I'd be putting my stop a couple ticks below the A period low. right? Because we think there's good odds the market will rotate down and get 2 ticks below the A period. So I'd go maybe 3 or 4 ticks below. That's where I put my stop, and I'd put my take profit at the POC at 39.4550 because that's the highest probability of upside. Now the market may push its way up and go right past all the way up to here, but this is very high probability that it'll come here. Yeah, Phoenix. So that's why I wouldn't have gotten into that trade at 41 up here in the balance area, because it wouldn't have been like a fun trade for me risk reward wise for where I'd have to put my stop. I would rather wait for the market to pull down to here and then enter long with like my stop below the low of the day. But if I had entered at 41, yes, that's where I'd put my stop because that could bring in new sellers, right? So, it's hard to say. To me, it's like 50-50 of what would happen once we got a few ticks below the A period here. Does it bring in the buyers that rotate us back up, or does it bring in sellers that cause us the breakout down? I'd have to wait and see. So I'd rather just be flat while I'm waiting to see. I can always, like if I got stopped out right here and then it started to whipsaw, it started to go right back up, I could always jump right back in that trade. And then I'm only giving up the little bit that I lost in between. But I would like to be flat when I'm back to uncertain about what the market's going to do. So again, John, just for your trade at 41, now that the market pushed lower and is pushing higher because it's rotating, I might go ahead and move my stop to a tick above break even and then kind of trail it a little bit so that if we don't quite make it to the POC, I can get out and then re-enter again on the next pullback. Rinse, repeat, keep trying at it until it gets there. How many contracts John trades? I don't know. Probably only one, right? John, you're only trading like one MES at a time, right? Oh, you're asking me how many I trade. Yeah, I trade based on the scenario. So like when I have, it's kind of hard to explain. I have like different moods that I'm in where sometimes I feel like I'm really in the flow of the market and like I just really know what's happening and I trust myself. So on those days, I tend to do like 2 lot entries into the ES. So I'll start with 2 and then add to it with 2 more. And I usually end up somewhere between 6 and 10 contracts for like a longer, say, trend trade higher. But on a day like today, I'd be trading 1 contract and just taking very small little trades. So it depends on how confident I feel with the trade. And then that kind of controls my position sizing. And if I have like a really bad day, like a day where like just every fucking trade goes against me, it's a horrible day. Oftentimes the next day I'll trade MESs instead of ESs just to like alleviate the tension and the fear that was left behind from the previous day. Mangesh, I'm assuming if you're saying that you use like Thinkorswim or something, you got to switch to a low cost futures broker. I think I pay like 30 cents or something like that round trip for a MES contract. Like it's nothing. Yeah, Thinkorswim's a fucking ripoff for futures. I would not recommend them for that. They're fine for buying shares of underlying stocks or for you know options, but no, I don't use Thinkorswim for futures. Yeah. Also, another thing that nobody ever talks about, you can call your brokers and ask them to lower your commissions, especially if you do a lot of round trips. Like they just will. They want to keep their customers. So when I used to use Thinkorswim for futures trading, I did it a couple of times. I called and they lowered it just a little bit each time. Um, but yeah, it just depends how many round trips you're doing and how good of a customer you are. Okay, so that F period low is now even weaker because the H period, they're doing it to themselves. They were doing it up here this morning. Now they're doing it to themselves here. They're getting too short and they're getting too long and they're just beating each other up. It's short term traders just picking each other's pockets here. Yeah. So Parlin, what you have to understand is the market, it's always going through a process. It has to do the same thing every day, always in the same way. It's like gravity. Gravity just keeps stuff stuck to planet Earth. That's what it is. That's how it works. As long as the planet keeps spinning, gravity will keep holding stuff to Earth. So markets have to go through a two-way auction process, right? We talk about this all the time. Feel free to mute it if you've heard me give this lecture before where I pretend to be an auctioneer at an art auction. But essentially the way an auction works, so an art auction, for example, is a one-way auction process. So the person brings out the piece of art. He talks about it. He says, look at this. It's a beautiful piece of art. Let's start the bidding at $1,000. Okay. So then he says $1,000, anybody $1,000. Nobody lifts up their paddle, right? Nobody wants to pay $1,000 for this piece of art. So he has to lower the price. So he goes, no one at 1,000. Do I hear 900, 900? Nobody lifts their paddle. Nobody's willing to pay $900. So he lowers the price again. 800. Do I hear 800? Do I hear 800? Boom, a paddle goes up, right? Somebody lifts up their paddle. Somebody in that room is willing to pay $800. So then the auctioneer lifts the bid up and he goes, I have 800. Do I hear 900? 900, 900. Boom, another paddle goes up. So wait a second. Why is somebody now willing to pay $900 for the same painting that just 10 seconds before they weren't willing to pay $900 for? Well, that's the human emotion side of it, right? Everybody was trying to be as greedy as possible. They were trying to let the price go down as low as it could so that they could get it at the best possible deal. But once somebody was willing to lift up that paddle and say, I'll pay 800 for this, then the fear, right, starts to set in on everybody else. Oh no, I want this painting and now I'm going to miss my chance. So now when it gets to 900, they're willing to pay for it. And so on and so forth, the process goes. I have 900. Do I hear 1,000? I have 1,000. Do I have 1,100? Blah, blah, blah. By the end of the auction, that painting that nobody was willing to pay 1,000 for at the beginning sells for 1,800 or whatever the case may be. So that's why we talk about the difference between price and value. The value of the painting never changed. It was the same painting by the same artist. There was no change whatsoever in the actual item throughout that whole process. But the price had to move up and down in order to bring in participants. In order to make people want to bid, the price had to go down. And then the further the price went up, the more intense the bidding became for those people, the more emotional. And so it drove the price likely to much higher than that piece of art is worth. Okay. So that's a one-way auction process. So a two-way auction process, which is what happens with financial assets, is basically, imagine if instead of there only being one painting, there was like millions of shares, right? Like there is of a stock or an ETF or futures contracts or whatever. So like say there was another painting that was exactly the same that went up for sale the moment that first auction happened, right? Well, now you'd have to go through the process again. So let's say the first painting, it bids up to 1,600 and it sells at 1,600. They bring out the next painting. I have 1,600, no one. It lowers its way back down again. So maybe the next one lowers from 16 back down to 1,000 and then somebody's willing to buy it. So boom. So that's what's happening in the markets at all times. It's a constant two-way auction process. And so what happens is, let me just pull up real quick here. Let me just pull up the daily. I find this is an easy one to use to explain this. So the way you see that auction process happen in markets is through excess and balance, right? So let's just zoom back here. So the market creates excess, right? It's going up and 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 up, right? and it's just purely pushing higher. At some point, it has to balance. It has to pull back and then grind around between levels and then push higher again to create new excess above the balancing area, right? So just draw like a square around this. So this was the balancing area. This was the balancing area. This was the balancing area. Do you see? So the market balanced, then it had excess, then it balanced, then it had excess, then it balanced, and then what we're in now is excess, right? So this is like over a longer term time frame because these are daily candles. It's just really easy to see on a daily basis. So that's what's happening here, is that when the market created all this excess, right? This was those bidders bidding that piece of art they weren't willing to pay $1,000 for earlier in the day. Look at how high they pushed it up by the end of the day. They bid it all the way up to $2,000 a painting. But now nobody's really ready to pay $2,000 a painting. I mean, we weren't willing to pay $1,000 a painting just earlier in the day. So now the market has to kind of fight its way back and forth. It has to bounce around and balance and just get some people super excited and some people frustrated. And it has to just work through the emotions of the participants. Once that's done, and it could last a day, it could last for weeks. There's no way to know how long you remain in balance. But then once you break out, boom, you get excess. So you get a big push higher when you come out of balance. So it's happening from day to day. It's also happening intraday within the day. So yesterday we were balancing down here. Actually, I don't remember yesterday. Let me stretch it out. Yeah, so we were balancing down here. We were doing business down here, and then we finally broke out of that balance right here. And then, boom, got the excess to push us higher, and then we had to balance that excess off. So that it's just a constant two-way auction process. I hope that helps. Okay, is H period a good low? Nope, weak H period low. They're still getting themselves too long. And when I say value, I'm referring to the value area, which is this blue shaded in section, which makes up 70% of the day's volume. Yeah, Slade. It's tricky. I mean, it really could go either way, but I definitely do feel like that tension is starting to build. The ticks are even getting thinner and thinner. The market is really, it wants to break out one way or the other. And I think when it does, it'll break out with some real excess. Yeah, John, it's so funny that yesterday or the day before we were talking about how you wait too long to enter the trade. And today I think you might be front running them a little bit. So, of course, if you're going to go short on a rotational day, you want to make sure you're above the POC, right? Because that's the fairest price to do business. So if you're going to sell, you want to sell to people who are overpaying. They're paying more than the fairest price. You don't want to sell for less than the fairest price. So yeah, you just front ran that a little bit. But the day's rotational. It'll likely rotate back down. Okay, first chance to see a market trying to make a breakout is on the 20 moving average here on the NASDAQ. If that becomes resistance and pushes the market down, I expect the balance to continue. But if it breaks out, that could be the first thing we notice that shows a break from the trend of rotating. Hey John, which candlesticks are you watching? What's your time frame? Are they like 5 minute? I might suggest you watch 15-minute candles or 30-minute candles. Um, I just personally found when I used to watch regular candles that the 5 minute sends way too many false signals. You can't look at the patterns. You can't look at the shapes of the 5 minute candles because they just change too quickly. So I might recommend trying 15-minute candles or 30-minute candles. You'll get much more reliable signals. $39.83. That's the all-time high. I agree with you, Algo, but I don't know that it'll happen today. But yes, if we can stay above that level, that is a target. Fausto, I just threw up in my mouth a little bit. You do what? Bro, you're looking at way too many charts. Do you have any idea how hard it is for your brain to recognize patterns when it has to look at the thing from 10 different angles? Ugh. Yeah, having them on your screen is one thing. If all day every day you're looking at all three of the different time frames, that's one thing. But jumping from time frame to time frame and back and forth, how is your brain going to learn to recognize patterns? Remember, you don't want to just learn how to do this. You don't want to be just okay. You want to be fucking expert. You want to be like so good at whatever your edge is that you're like the best in the world at it. Now, if you're trading candlesticks and you're looking at 10 different types of candlesticks all day switching back and forth, you will not be the best in the world at reading candlesticks. You just won't. So better to pick your time frame that you like and every single day stare at those, master those, become the best at reading those candles. But that's just me on my soapbox. Yeah, I love it, Algo. As always, thank you for the advice. No, Fausto, the point that I'm making is what happens in the hourly also happens in the 5 minutes, also happens in the half hour, also happens in the 4 hour and the daily. Like they're all showing you the exact same information. So it's like you just learn to see it, whatever the change is that's taking place in the market, you just learn to see it in the 15 minutes or you learn to see it in the 30 or whatever. Whereas like if you're jumping from one to the other, it looks totally different. So your brain is like, wait, what am I looking at? But again, if it's working for you, keep doing it. That's my motto. Do what works. Oh, Dove, every time, baby. Got to have that smooth skin, you know? Fausto. I hear you, bro. I think you're missing my point. That's the problem is that they all look different. That's what's confusing for your subconscious, which is just trying to learn to recognize patterns. There's no pattern to recognize because it's constantly changing every time you click to a new chart. Ooh, Bob, talk dirty to me. I put moisturizer on my face every day and I'm not ashamed of it. Okay, men can moisturize too. I do think we're going to go higher. Um, and as I've said, I think when it happens, it'll happen hard and fast. Um, but we could need to continue to balance for who knows how long. You know, you'll see the first of it will probably be us breaking above the 20 in the NDX here. You'll also probably see a tick that's like really powerful, a big, thick, green candle up. But until then, the market's just going to keep bouncing around like this. That spring is getting tighter and tighter and tighter, though. Miles, welcome. You've come to the right place. I don't have a pirate beard. I'm so sorry, guys. Sorry to disappoint. Do I need to grow one? Is this like a new requirement? Yeah, Algo lover. That's the way I feel too. I wear glasses though, so if I had an eye patch, I how bizarre would I look with an eye patch and glasses over the eye patch? Because I'm not popping out the lens on the side that has the eye patch. So it would be like, what's going on with this guy? No, Fausto, brother, I get what you're saying. Okay. I understand. I do that too. I look at the daily and the weekly and the monthly charts to give me perspective as well. What I'm trying to explain to you is that intraday, when you're jumping in and out of trades, it needs to be based on instinct. That instinct comes from looking at the same things over and over and over again for months and months and months, not switching back and forth. But I'll just say what Jim Dalton always says when he gets into this debate with people when they're taking his courses, which is he says, like, if you paid thousands of dollars to come here and take this course from me, it's probably because what you're currently doing isn't working. So if it isn't working, why not try something else? At least try it just to see. But, if you feel confident that you're getting an edge, that you're making more money because you're looking at all those different time frames, then keep doing it. I just assume that that's not actually helping, it's hurting, and that you think it's helping. But of course, I have no idea. Okay, another week high here. They're still just fighting each other, just picking each other's pockets. Okay, these comments are getting out of hand. I don't have a boat. I definitely don't have a cat. I'm a dog guy. I don't have a bandana. I can't help you people. Miles, no, I don't have any sort of like pre-made videos. I'm working on stuff like that, but pretty much I just come here every day and live stream and just kind of talk about what I'm seeing as I see it. If you're trying to learn Dalton's way, though, you'll probably find it convenient that you're hearing a lot of the same terminology and seeing it in action. Oh, I've got a peg leg, if you know what I mean. That one's for the cheap seats. Yeah, you're welcome to jump into the chat anytime and ask questions. If you're going to enter a trade and you want to ask me about, is my theory right? I want to go short if we get a tick above the I period here because that's good excess over the H and it's the top of the value area. Like if you want to just ask me, I'm happy to always give my my input. Yeah, that's a great way to phrase it, Algo Lover. We don't want to lose in a business that requires it. That is the fundamental problem. We must accept that we're going to be wrong. We must accept that we have to lose money to make money. And so the trick is just to lose as small as possible, to get out the moment we know we're wrong. And then when we're right, to trust ourselves, to have confidence and to let that sucker run as far as it will. You've heard a parrot in the background? I don't know what that could be. Yeah, you've pointed that one out before, Jonathan. I haven't had a chance to go watch it, but I really want to check that one out. Whoops. I'm opening up the Discord so I can pop the link in there. Boom, just pop that link in the Discord under education for anyone that has like 4 hours of free time. Miles, I would wait to get just a few ticks below value normally, but with this weak H period low, if the market were to sell down here, it seems like it would want to repair that. So I'd probably wait till 2 ticks below that and then go long. Or if it went a couple ticks and then started to rotate back up, I'd just mark it, go long before we got back into the value area. The idea behind the name Pirate Traders was just I a combination of I just think it sounds cool, like it's just a cool name, and the fact that I kind of feel like traders are like pirates. Like if you think about the old school pirates back in like colonial days or whatever, like they would basically just float around in the ocean looking along the horizon for other ships that they would be able to catch up to and then like rob, like pillage. And that's kind of what trading is. We're just sitting back. Our ocean is the market, and we're kind of just sitting back looking for those opportunities to plunder and take from the unsuspecting other traders floating around in the ocean with us. I've honestly since kind of changed my perspective on that because I've now realized trading's not like you versus the other traders. It's really just you versus you. Um, but I still like the name, so I'm sticking with it. Okay, the high and the low of the I period are weak. So it's just these short term traders are getting themselves tighter and tighter wound here. Still rejecting off the 20 moving average. No, Miles. Each 30-minute time period is like a new thing. So even though the B period was back here, the F period coming in within one tick of the A made that weak, right? Then the H came down and repaired that, but it made another weak reference. So yeah, it's just whatever the last TPO that you print that creates the weak references, and then they aren't repaired until a new TPO comes in and passes through it. TPO for the new people means time price opportunity. It's basically just the candlesticks, the H, the letters and stuff. All right, Algo. Good to have you. Maker, yep, that is a great observation. As Jim Dalton would say, traders do what works until it doesn't. It's the same pattern of behavior that's been happening all day. It just moved down slightly to a lower price level. But they're still getting themselves overly long, overly short, overly long, overly short. It's just the same thing happening. All right, Jonathan R. Good to have you, brother. Hope to see you again. Thank you, Brady. Appreciate it. Yeah, would love to get those thumbs up coming in here. 66 viewers right now. If any of you haven't hit the like, please do. We're trying to get to 100 today. Um, okay, so Austin, again, this is like, it's, I can't give you a simple answer. You just got. I know this is going to seem like it's a trick. I'm not trying to trick you. You just got to keep coming back every day and watching me talk about this stuff over and over, because it's just too much to try to explain all at once. Um, there is no this. The market profile is not like an indicator like VWAP or moving averages or RSI or something like that. MACD, where it tells you like, okay, if this thing happens, that means this. You if for example, if the ticks get below 1,000 or above 1,000, you go short or you go long. It's not that type of system. It's just it's basically just a more complicated way to look at the same information, and then I make my decisions based on a series of different pieces of information. Some of it from here, some of it from the internals. But it's just a way to look at the candles in a different way. And if you're curious what that is, it just makes it three-dimensional so that we can see time and volume at each price level. That's basically what separates it from candlesticks. But there is no like standard system of like you do this when this happens. That's just not really how it works. Yeah, Zoe, if you scroll up, I posted a link. Just look for my name, Pirate Traders, in the comments. I posted it this morning, like first thing. Jacob, great question. The value area is calculated by volume, but the POC is calculated by time. Here's that Discord link once more, in case it won't let you scroll back. I know, Salmon, isn't that frustrating how simple the idea is? That if on a rotational day, and again, it doesn't matter on a trending day, because on a trending day, you're going to keep pulling that Ferris price higher and higher. But on a rotational day, the simple idea is if this is the fair price, you want to be selling to people who are overpaying and buying from people who are, you know, undercharging. It's such a simple idea. And yeah, for the person that mentioned the VWAP, you'll basically always find the VWAP right at wherever the largest node of volume is. And it's usually pretty close to the POC. But it's the same idea. It's just a reversion to the mean. Okay, so we broke out above the moving averages here. I'm not going to jump into a long right away, though. What I'd like to see is for it to pull back down and then find support on those moving averages. There's that. Remember I said you'd get that one big green candle, big bodied green candle. Looks like we got that as well. So this could be the push that starts the move higher. Still got 2 weak references below though. So let's wait for support and then we enter. Or at least I do. You guys do whatever you want. John, it's a simple moving average. And it's also worth noting the reason I use the SPX is because it only calculates during the regular trading hours. So if you want to put it on the futures contract, you want to set it up so it's only showing you the regular trading hours. But yep, it's the 20 simple moving average on the 15-minute candles. And it is shocking how often it works as support or resistance. So it's a good thing I didn't FOMO into a long trade because it did not act as support. It ended up being resistance, as it has been with the NDX. So probably we need to come down and repair these weak references and then get some more rotation. Rocky, watch. This will be one of those days where like the market does this all day long, and then in the M period, it just shoots like a rocket ship up, and it happens so fast, none of us get to catch it. Okay, once again, I'm definitely not going to try to short it, even though we're getting above value, because this could finally be the breakout of this range. Ticks had that big green up, and now we're kind of trending higher, starting to push higher on the other two internals. And once again, we're back above that 20 moving average. So it doesn't mean this has to be the breakout, but it feels like the market wants to get its breakout. So I won't go short against that. Nathan, the blue box is the value area, and it starts creating that the moment that the market opens and starts to trade. So, like when the first contract trades, that contract is within the blue, it just has a blue box around it. And then as it spreads, it just keeps track of wherever 70% of that trade is so far that day. But it is an important concept to consider the fact that it's constantly changing, it's developing. So a lot of times you can actually give yourself an edge over the market by kind of assuming where the value area will be if such and such a thing were to happen. So like, for example, right now, the value area is overlapping to lower than yesterday's value area, right? It's a little bit lower, but it is overlapping. So that tells me on a longer term time basis, like going into tomorrow, the odds are either neutral, meaning more sideways movement, or bearish, further downside continuation. But if we get a spike up, I mean, it would have to happen soon. But if we got a spike up and then a ton of volume flooded into the market at the higher prices, we might pull the value area to be looking much more like yesterday. And then it might just be overlapping and no longer overlapping to lower, which would be a little more bullish moving forward. So you do want to, I mean, this is getting very nuanced, and don't try to do this at the beginning when you're first learning profile, but eventually you can start to kind of include scenarios of what could happen to value and what that would mean, because it is constantly in development and constantly changing. Same thing with the POC. The POC is constantly moving throughout the day, so you can kind of make assumptions about where's the fairest price to do business based on how much it's moving up or down. Yes, sir. News blip. But keep in mind, most of the people only pop on for like 5 minutes. So when you see that there's 70 people watching, a lot of those people came, they watched for 5 minutes, then they left. That's what most of it is. Miles, that's up to you and your personal trading strategy and risk versus reward. If you were going to go long here on the idea that the 20 is going to become support and that we might break out because the ticks and the other internals are starting to show, although this tick's going against me now, it's coming back down. If that's the play, then you just have to be willing to have a very loose stop, right? Because you know, statistically, when the market is rotating, it can keep rotating. So the odds of it coming down and repairing these are probably higher than the odds that it breaks out. So it'd be fine to go long right now for that breakout, but you'd have to be willing to put your stops down here and sit through a pullback. You know what I mean? So if you want to go long, maybe better to wait for the pullback and then risk missing this much, because you can always go long on the breakout too, you know? So that's for each person in their own individual style. In my opinion, no, not great risk reward right now. I'd rather buy it up here. As crazy as that sounds, I'd rather buy it up here than buy it down here, because then it's a much higher probability of being correct. Or if I get the pullback and I repair these, that's a beautiful time to buy. And then maybe when it comes back up to the POC, I don't take profits. I hold on to it to see if I get the breakout. Shree in the house. Good to see you. Correct. Yeah. Miles. I don't know that I would call it a look below and fail. I guess technically it would be if you got a few ticks below this H period. But I just see that as creating good excess, creating a good low, and then rotating back up. But that's the idea. Shria had a couple little ones where I tried to buy below for a rotation back up, but they were all real small. It's been an extremely boring day. A day that requires a lot of patience and a lot of sitting on your hands. Well, Nathan, that is a great example of the limitations of looking at regular candlesticks, right? Because I think it went the opposite, didn't it? Yeah, it went the opposite yesterday, right? We pushed our way up into those highs, and then we just got a counter auction in the overnight where it just pulled back because of the amount of excess to the upside. So, what you're seeing on your longer term charts was actually not what took place. It's the beauty of looking at it in the profile. Miles, it's a tough question to answer. Um, it's not something I just like learned. It's like something that I learned and then practiced and did over and over. And the more time that I spent, the more the concepts kind of sunk in. But I took three different courses with Jim Dalton, who's my mentor. I took he has a smaller version of a course called a primer. And then he has what's called an intensive. So the primer is like 2 weeks. The intensive is like a month. So first I took the 2 week primer. Then I spent like 2 months trading with the profile, having no clue. Like I knew all the terms. I knew what a poor high and a poor low and a POS. I knew what they all were, but it hadn't clicked yet for me. So then I took an intensive, spent a month, during his intensive. Then I felt like, okay, now I really understand the concepts. So then I went back, spent another 2 months trading with it, and really felt like I had a deeper understanding. So then I took another primer, hoping I could like learn some more. And then after that one, I kind of felt like, okay, I've learned all the concepts. Now it's about me just developing my own skills. But that being said, still to this day, every day, I get a little bit better. It's not a you learn it and you're done thing. It's a you're constantly trying to get better and better and better at it. So I can give you an example of that from today, right? So all day I haven't taken a single short trade. And the reason I haven't taken a single short trade is I came in this morning because of yesterday's activity and the overnight activity. I came in this morning with a bias for the market to go long. I felt like it was going to push itself higher. So I've been afraid to take any of the shorts that have been above the value area. I missed the E period and I missed this K period because I just had this bias to go long. So a few minutes ago, I was asking myself, okay, well, how do I do better next time? How do I not have this bias? What did I miss? And then I realized the overnight inventory was almost entirely net short. Okay. And all we got for a counter auction was just a couple bucks higher. Right there in the A period, this is all we got from 39.48 to 39.50. So we literally just got $2. That should have been the signal to me. Wait a second. If I'm bullish and we had this heavily, short overnight activity, I should expect to see a good, counter auction first thing in the A period. And so that's the signal that I missed that said the market was probably going to stay down at these levels. So every day I'm constantly asking myself, what did I miss? How can I do better next time? And I'm just still in the process of learning and developing my skills. Same here. The chunking concept, that's what it's all about. And when you hear him talking about it, it doesn't sound like it's a real thing. It doesn't sound like that's what's really the most important thing, but it is. Letting your brain be able to have all these different stimuli coming in, signals long, signals short, leaving old references, so on and so forth, being able to let all of that flow into your brain and then your subconscious just do the processing and you just trust your instincts off of what you're seeing. Man, it's so powerful. But there's no way to get there other than just spend months and months and months staring at this chart all day, every day. That's the only way. But it's the same as learning to play an instrument, learning a new language, learning anything difficult. You just have to practice and practice and practice, and you get better. John, I don't know of one specifically that does that, but you could do it manually yourself. You could mark on your chart where the closing price was, just draw like a line yourself and just label it closing price on such and such a date, and then see where the opening price is the next day. Thank you. That is such a great example. So if you want to understand chunking, it's like when you back, that's Jim Dalton's favorite one. He does that like a zillion times. It's like backing a car out of the garage, right? If you were to get in your car right now and back out of your garage, it wouldn't be hard for you, would it? You would just get in, put it in reverse, back right out. It'd be so easy. But if you were a first time driver who's never backed a car out of a garage, it would be scary, right? You'd have to, you turn it on, and you'd have to make sure you're in reverse, make sure you're going to go in the right direction, and then check your rear view mirrors, and you'd be slowly backing out. And like, it would require you to sit and think your way through each process. You'd have to think, okay, put it in reverse. Okay, turn over my right shoulder and look out. Okay, turn the wheel the opposite direction of where I want the car to turn. You know what I mean? You'd have to actually think each thing through. But after you've pulled out of the garage a million times, you don't even think. You could be on the phone with somebody and pull out of your garage and not even notice. That is chunking. It's when you do something so much that your subconscious brain has like muscle memory. It can just do it without you having to consciously think about it. All right, so I am long here once again at 39.48 with a stop just below the halfback in the hopes that this will finally be the breakout. If not, I'm happy to eat that little bit of loss. Let's see what happens. Okay, the breakout went straight to the first resistance, the overnight halfback. There's going to be lots of resistance in these levels here where all the volume was built up from overnight. So let's see if it's able to grind its way up into there, or if we pull back down into range. I've also just moved my stop to a tick above break even on my trade, so I can't lose money. And I'll just monitor for continuation and see how high we can go. John, it wasn't me. I only bought 2 contracts. No, it was just like I said, that rubber band, right? That spring has just been getting wound tighter and tighter. It was ready. But now let's see if it can hold. That's the question. As it starts to enter this resistance, are we just going to fall right back down into here, or can we stay up at these levels? Creating another poor high. It's still just short-term traders. Restore the Snyderverse. Thank you, Fausto, for the $5. Have you noticed nobody's jumping on our comic book nerd bandwagon here? It's just you and me, man. I did finally finish it though. I loved it. I thought it was much better than the original. I loved the ending too. I thought it was great. But thank you for the $5, bro. I appreciate it. Yes, sir. Everywhere, this whole area up in here where all the volume was traded, both yesterday and in the overnight, will probably act as resistance, right? So I've got my take profit order right here at this POC. I feel like I should have just taken it right there, but it was too fast. So yeah, I think we're going to get up into here and we're going to grind around up in here and put in some volume. That is correct. Good excess on the high. Good taper. I don't love the 20 contracts at the high, but it's okay. Um, Now the market has to build some volume in here where it was super thin, right? Only 6,000 contracts traded at this level, whereas below it, 11,000, above it, 10,000, right? So we just got to backfill a little bit, I think, before we take another stab at this area. It doesn't seem like it wants to pull back into value, though, right? It seems like it's every time it comes down here, it's finding support above value. So it wants to move higher. It's just very low volume, so it's taking time. RK, that's perfect, man. You recognize those things and then you ask yourself, what could I have done differently? Or what could I do next time to stop this from happening? How do I not force an early trade? How do I not reverse back and forth and just step aside when I don't know what's happening? How do I get out of a trade, at a point where it's profitable? And at least you got it. You got the lesson without having to lose any money. So that's great. Yeah. How do I not have stress? Those will lead you to better decisions tomorrow. Yeah, it did. Shri, you still in that long? Now you're speaking my language, Shri. I'd happily sit all day waiting for one trade if it gives me $1,000. That's good money for a day's work. Shri, nothing makes me happier than hearing you say that. If I can help you trade with more calm, then I'm achieving my goals with satisfaction. All right, guys, Lady M is upon us. Start hitting the chat with your predictions. Where are we going to end in the next 30 minutes? My vote, personally, is a push higher, and we're somewhere inside this little prominent POC area up here in the overnight. What do you guys think? Ryan's up first with 39.60. Ooh, he sees us in the same area. Donkey, 39.65, seeing us get a little push higher. All right, another for us to push higher. 39.64. $65, $64. I don't love that we're all guessing the same place. We don't normally do that. The crowd is normally wrong, so if we're all guessing higher, that's not good. Somebody get in here and guess lower. Well, we've already had a spike. This was the spike here in the K period when we broke above the balancing area, the range that we were stuck in the rest of the day. That was the spike higher. So now we're seeing if we can maintain the spike. At least by my terminology of spike. Okay, so Asif is looking to go short. He's going to buy my contract from me. I'm right here at, I think, 59.50 is where I have mine set for to take profits. And then he sees a pullback to 43. Or 42, sorry. Chris M coming in with 62. Another push high. Thank you, Asif. You can have mine. I'm happy to give it to you. Deke calling it right here, right at 36 or 56. Come on, market, just go fill my order real quick. It's the M period. You could do it. Just go fill it. Moving up my stop just in case. Correct, Fausto. It's the actual trades on the ES that move it. But of course, all the markets that are S&P 500 related have arbitrage bots. So if somebody comes in and buys a bunch of SPY, there are bots that will come in and buy the futures contracts at the same time. They'll buy call options for the SPX at the same time, so on and so forth. The companies that run the SPY ETF will then take that money and buy the underlying shares. So it's just a process of like everything balancing itself out simultaneously, which is why they all move together. Damn it, I just got stopped out on that trade. Made a whopping $300. But that's the name of the game. All right, M period is pulling back into value. I said it wasn't good that we were all seeing it go higher because the crowd is usually wrong. But who knows? Maybe we find some support here in the last 20 minutes and push higher then. Correct. Yeah, that's how they stay in sync. Yeah, Nathan, it's vice versa and all at the same time. So yeah, if people are buying the underlying stocks, that's going to push up all the indexes. If people are buying the indexes, that's going to push up the underlying stocks. That's what those arbitrage bots do. Is they keep everything moving together. This is one of the reasons why I love the ES, because as a market, the S&P 500 is just so elaborate. There's so many different mechanisms that affect the price movement that you end up getting much more consistent patterns and much easier to read, as opposed to like trying to look at an individual stock, right? Like an individual stock can do anything on any given day, whereas the S&P 500, it generally just follows the same patterns because there's so many, parts connected to it. Well, it looks like whoever called the excess high on the L period, somebody brought that up in the chat. Looks like you were right. That was the excess the market needed. New guess, closing closer to the POC. Jonathan R., thank you for hitting that subscribe button, brother. Glad to have you. You're welcome, Rocky. It's my pleasure, man. Well, high. It's actually not. So basically, once you break out of a balance area, which is what we would call just today's trade a balance area, once you break out, you don't really want to pull back in because that's considered a look above and fail. And the most common thing that happens when you look above and fail is you rotate down to the opposite end of balance. So if we close inside the value area, that just means the overnight will likely have to trade down and get below this range. You know what I mean? So it might come down and repair these weak references. So you really do want to end, once you create the spike up, you want to end up higher above the previous balance. Yeah, we groupthink that one. That's on us. And that never happens. We always have 50-50. Half the people think it's going up, half it goes down. Today, everybody thought up. So where does it go? Yeah, beneficial visualization. Yep, totally. That is a lesson I have learned so many times. I don't almost never enter a trade during the M period. If I'm already in one, I always go tight with my stops so that if, like I did today, right, as soon as I saw that we weren't getting higher, I just moved that stop up and just let it fill because I knew how much, this market can move during the end period volatility wise. So, yep, I think that's very wise. It's also, I find, random. End periods are totally random. So yeah, I just don't like things I don't understand and I don't know what they're going to do. Okay, so case in point, just a few moments ago, when Shri asked about the look above and fail, this is what you get. You trade down to the opposite end of the balance. So we'll get hopefully a repair of both these weak references, and then the market rotates up to finish, around the POC. Needs one more tick of excess to repair that J period low. We're at 78 likes. There's 83 of us. Can I get 2 more likes? Can we get to a nice round number? Can we get to 80 likes here at the end of the day? Do you feel like I brought you any value? Will you just like me? Just please like me. 79. One more person. There must be one person out there who 80. Woo! All right. Nice round number. Record number. Record number of viewers. Record number of likes. Team, we are crushing the game. Let's keep it up. All right, so we repaired the first of those weak references, and now we're rotating back up to the POC. But we've only got like a minute left. Oh boy. See, this is why you can't trust an M period. Look at that. They just took a lot of people's money. Oh, and here they go again. Oh, I love it. All right, guys. Well, what a fun day. What a really interesting and exciting day it was. Thank you all so much for joining me. And we will see you here tomorrow. Thank you very much. Bye-bye.